Imagine going to work for weeks, clocking your hours, and knowing your bank account will hit zero on payday. Not because you were fired, but because Washington couldn't agree on a budget. This isn't a hypothetical nightmare. It's the cold reality of a government shutdown, and it's pushing hundreds of thousands of otherwise stable middle-class American families to the brink. They're guaranteed back pay, but try telling your landlord, your daycare, or your utility company to wait for an IOU from Congress. The last major shutdown cost the U.S. economy an estimated $11 billion, with $3 billion permanently lost. But the true cost is measured in the silent, everyday financial anxiety of families who thought they were secure. The shockwave, furloughs, and the cash flow crisis. The immediate and most palpable effect of a government shutdown on the middle class is a direct impact on federal employees. While the term furlough might sound like a temporary vacation, for the roughly 750,000 federal employees who may be sent home without pay, it's an immediate liquidity crisis. According to the Congressional Budget Office, CBO, the cost of daily compensation for furloughed employees is approximately $400 million per day, money that evaporates from local economies until Congress acts. Crucially, studies have shown that many government employees, much like other Americans, live paycheck to paycheck. The median federal employee has only about 1 week's worth of expenses saved in liquid accounts. When a shutdown hits, bills don't stop. Mortgages, car payments, and the soaring cost of childcare immediately create an unbearable pressure cooker. For accepted employees, such as air traffic controllers or federal law enforcement, the situation is arguably worse. They are forced to work without pay, unable to seek temporary side jobs, and forced to endure the same financial strain as their furloughed colleagues. In the short term, this forced financial gap drives families to rack up high-interest debt, deplete retirement savings through penalty-free withdrawals, or apply for state unemployment insurance, UI, benefits which, if collected, must often be repaid after they eventually receive their federal back pay, creating a secondary administrative and financial headache. The damage isn't just the government staff. The economic advisory firm Oxford Economics estimates that federal grants and contracts support up to 10 million private sector workers, including middle-class jobs like janitorial and security staff at federal buildings, who are not guaranteed back pay and face immediate, permanent income loss. The ripple effect: loans, housing, and small business stalls. Beyond the federal worker, the shutdown quietly throttles key services that the middle class relies on to manage major life decisions and investments. One of the biggest casualties is the flow of credit and support. The Small Business Administration, SBA, stops approving applications for small business loans and loan guarantees. During the 2018 to 2019 shutdown, Moody's Analytics estimated that this delay held up over $2 billion in loans to small businesses. For middle-class families starting a restaurant or a contracting company, this halt can mean bankruptcy, layoffs of private sector workers, and the collapse of a lifetime of savings. Similarly, the housing market takes a direct hit. Federal Housing Administration, FHA, insured mortgages experience significant delays in processing and closing as FHA staff are limited. For a family attempting to close on their first home, a delayed loan approval can tank a sale, lead to lost earnest money, and create massive stress. First-time home buyers rely heavily on this process, and a shutdown turns a stressful event into a potential financial disaster. Even student loan assistance is not immune. While Pell Grants and direct loans generally continue, a prolonged shutdown can seriously disrupt the ability of the Department of Education to assist borrowers with applications for forgiveness programs or resolve issues with their loan servicers, adding bureaucratic friction to already burdensome student debt payments. For those relying on tax refunds as a critical financial boost, a shutdown can also mean significant delays in processing tax refunds due to reduced staffing at the IRS, a delay that directly impacts the purchasing power and emergency savings of millions of middle-income households. The human cost, morale, productivity, and brain drain. The final, lasting impact of the shutdown is less measurable in dollars, but is perhaps the most destructive to the long-term stability of the middle class: the erosion of public service morale. Research has shown that federal employees exposed to shutdowns experience a shock to morale that's comparable to a 10% drop in cash salary. This psychological toll leads to tangible long-term damage to the federal workforce. After a shutdown, federal agencies experience a noticeable uptick in employees. Both younger, highly skilled workers and older, experienced managers, quitting or retiring early. They are simply choosing stability and respect over being used as political leverage. This brain drain makes it harder for the government to hire top talent, leading to long-term reductions in government performance. For instance, some analyses have found that after being affected by a shutdown, government accounting departments begin making a small but statistically significant increase in mistakes and faulty payments, errors that, when scaled across the entire federal budget, can amount to billions of dollars in losses over time. The shutdown is not merely a pause button. It's a structural destabilizer. It weaponizes the financial precarity of the middle class, the very people entrusted with food safety inspections, air travel security, and processing our essential benefits, and uses it as a bargaining chip, ultimately diminishing the quality and efficiency of the government services on which all middle-class families rely. The shutdown pushes them to financial brink today, and by driving town out of public service, it makes our government less effective tomorrow. Conclusion: a crisis of policy, not people. In the end, the government shutdown is a self-inflicted wound that causes billions in economic damage and yet achieves no long-term budgetary savings, with the CBO noting that much of the lost GDP is never recovered. Its true harm is the creation of financial crisis for hundreds of thousands of middle-class families, forcing them to liquidate assets, accrue debt, and endure tremendous mental stress. The policy impasse in Washington creates a wave of uncertainty that washes over the housing market, small business lending, and the very foundation of the federal workforce. The statistics prove that this is not an inconvenience. It is a profound financial and emotional blow to the very workers and citizens who strive for stability and depend on their government to function. The shutdown is not just a budget fight. It's an attack on the financial security of the American middle class.